Well, on the regulatory front, there is a fair bit happening as well. SEBI has proposed algorithmic trading for retail investors with additional safeguards. SEBI has submitted a consultation paper on the same and has sought comments from the public by the 3rd of January. We have Rajesh Baheti, Managing Director at Crossseas Capital Services, and Tejas Khoday, Co-founder and CEO at FYERS, now joining in. Tejas and Rajesh, great to have both of you here. Thank you for joining in. Rajesh, so just to put this in context, I mean, is this to safeguard, is this to kind of frame regulations around a new segment which is opening up for retail, or is it to kind of put in guardrails for a lot of the offerings which are already there? Because I suppose it's the latter. A lot of these offerings are already there for retail investors, right? For a certain fee, you can get access to these programs, and I mean, it's been on for years. So just wanted your thoughts, Rajesh.
Yeah, so it's not a permission for retail to do algo trading. They were already doing it. It's actually a guardrail. You're absolutely right. What was happening currently was that there were these marketplaces that were displaying algos from independent algo providers. They had connectivity established to maybe 10, 15 brokers. So you could choose your algo provider. You could choose your broker. These brokers had given their APIs out to these marketplaces as well as to anybody who wanted to develop an algo. And then you were connecting to one of these brokers, but these trades were not getting reflected on the exchange system as an algo trade. They were just simply being reflected as an internet-based trade. So what SEBI has said that you cannot simply expose your API now and have these people log in and do that automation, and you cannot call this an internet-based trade. Each and every algo has to be identified as an algo trade, and permission has to be taken from the exchange. The algo has to be approved, and the algo providers also simply cannot lend their algos out to the public. Just like that, they have to be registered as investment advisors. So it's being made much tougher now for people to simply offer their algos because they have to be registered as investment advisors. And if you make your own algo, you can only do it for your own family, and you can't simply farm it out to other people.
Nadi? Okay, that's interesting. Because the way I said it, I read a couple of reports which basically said it's kind of to level the playing field. Institutional investors have access, why shouldn't retail? But what I'm hearing from you, Rajesh, is actually, if anything, it'll make things tighter in terms of access to these algos. It's the opposite.
Yes. Currently, a lot of retail algo was being represented as an internet-based trade and not technically an algo trade. So you could argue technically a lot of this will move into algo trading, and therefore you can say that retail is doing algo. But all this is just simply change of nomenclature with a lot of conditions.
Tejas, your first thoughts on the subject?
Hey, Prachar. Yeah, so Rajesh is on the right track. I feel like it's going to be more compliance-oriented, operationally cumbersome, especially for brokers and the traders, because algo trading is all about iterating strategies on the go as well. It's not as though you create a strategy and run it all year round. That's not how it works. So there is still no clarity about if every iteration needs approval, especially if it's a black box strategy. So it's something to wait and watch for. We are going to give our detailed feedback to the regulator about this. But largely, like Rajesh said, algo traders are already doing what they need to do, right? Algo trading is already democratized, and we have been at the forefront providing these services. But from a regulatory standpoint, I think what they are doing is trying to increase the span of control and making the buck stop with the broker, because they are the regulated entities. And I see long-term benefits to this, like I always do. And it's ultimately going to help expand the ecosystem, albeit at a gradual pace.
Okay. Rajesh, you said that trades were not getting reflected as algo trades at the exchange, at the exchange level. I mean, a trade is a trade, I would imagine, right? Why is that? How is that different, and why should it be? What's the reason?
Well, one of the reasons could be that if you run black box strategies, you could have a situation where there's a runaway loop that an algo creates. There could be coding errors. And what exchanges need to understand is if some of that is happening, or if there are any algos that are detrimental to the integrity of the market. And if these trades simply get reflected as an internet-based trade, it looks like a manual trade. And you've got to be careful when you run algos in terms of risk management, because these are automated systems. And if there's one coding error, it's likely to get repeated over and over again in a loop. So from that point of view, reflecting it as an algo trade also for understanding how the market is evolving. I think data gets collected on, what percentage of trades are algo, what percentage is institutional, blah, blah, blah. So from that point of view, also, it is not a bad idea to identify them as an algo trade. But I think the problem, as my co-participant has just said, is that algos are not static instruments. You really ought to, if you want to survive in this market, there is a change needed maybe every day, every week. And you've got to tweak your strategies, go back and back test them every evening with the new data coming in. And to say that every time you change a parameter, you've got to go back to the exchange is simply saying that, you've got to eat a stale apple every day, because you've got to make a fresh one and you've got to put it in the market out there. So I think that's the problem area. Let's see how that gets sorted out.
The iteration bit which Tejas also referred to. By the way, the three listings are up on your screen. Vishal Megamart, 36% odd. I mean, listed, I think, with a 50% premium on top of the issue price. Sai Life Sciences, that's a 21 odd % pop on top of the issue price. And you got MobiKwik. They cut down their valuations by basically down to 1/4. And the stock's jumping, and how? 75% on MobiKwik. So $490 coming through there. So that's a rich screen. Primary markets are red hot, and more companies, interesting companies from different sectors, older sectors, conventional sectors, are coming to the market. You'll hear, by the way, we've already spoken with the three managements over the last couple of weeks as the issue opened, and you'll hear from all of them later through the course of the day on day one. So from Vishal, from MobiKwik, and Sai Life Sciences, and hopefully you'll get some sort of, forward-looking numbers, etc., as well, in terms of what growth expectations, etc., are. So those are the new listings out there. Tejas, just in terms of your platform, is there any way to quantify how much of the volume is, or maybe even for the broader market, if you have a number, how much of this is retail algo volume?
Very small currently. Discretionary trading dominates retail volumes. At FYERS, it's in the single-digit percentages in terms of the number of clients that participate using algos. If you've read the white paper, right, the regulations that are being proposed by SEBI are, I would say, positive in the long term. But in the short term, it's going to create so many hassles. It's one thing to identify a trade as an algo, which is required from a regulatory standpoint. It could cause loops, it could cause flash crashes, very unlikely for retail. But I'd say it's definitely positive, and it's a growing sector. I think it should grow much more, because these days people don't really have the time to trade during office hours, right? They're either stuck in traffic, in meetings and whatnot. So automating trades is the way of the future, and we should not resist it too much, because it will stall the evolution of stock markets, in my opinion. And it also helps, right? Because retail traders are able to control their risks much better and trade in a more objective, less emotional manner. And that is that is actually a desired outcome for all stakeholders.
All right, we'll continue this chat, and once the sort of rules come into effect. Right now, of course, it's a consultation paper open for comments till the 3rd of January. Rajesh and Tejas, good speaking with you. Thank you very much for joining us.